Elon and Doge, we're kicking down the door, rolling to the SEC, time to settle the score. Elon in the game, breaking all the chains. Doge by his side, they don't play no games. Step into the SEC, watch them all sweat. We uncovering the fraud, ain't no secrets left. Naked shorts in the shadows, they've been creeping. Market manipulation, these crooks been sleeping. Retail's been trapped, but we bring in the fight. Musk and Doge on the rise, taking back the night. We in the SEC, exposing the lies. Rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win. Dirty tricks they try to pull, shorting stocks, playing games like a fool. But we too sharp, we calling the bluff. Elon's got the plan, now the pressure's tough. Retail investors, time to get your share. No more rig markets, no more despair. Fraud's going down, we taking control. Elon and Doge breaking out of the mold. We in the SEC, exposing the lies. Rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win. We on a mission, bring the truth to light. No more naked shorts hiding out of sight. Retail power, we reclaiming the street. Musk and Doge bringing heat to Wall Street. SEC, exposing the lies. Rooting out corruption, watch them meet their demise. Free the markets, make them fair once again. Elon and Doge rolling deep for the win. Hey, we on a mission, bring the truth to light. No more naked shorts hiding out of sight. Retail power, we reclaiming the street. Musk and Doge bringing heat to Wall Street. Doge holding it down. They can't stop us, we're taking back the crown. Fraud's uncovered, justice in our sight. Markets are free, we restore the light. Elon in the front, Doge holding it down. They can't stop us, we taking back the crown. Fraud's uncovered, justice in our sight. Markets are free, we restore the light.
There we go. Welcome back, folks. We got another fun one on our hands. There's a lot to talk about. It's been a little while since I've last done a video, but I promise you that's going to change. It's time to do more frequent videos, again, more live streams. We're doing a bit of a long form one here, guys. So settle in, grab some popcorn, you know, enjoy your drive home, whatever it is you're doing. Enjoy your time at work. Hey, Reef, welcome, my friend. Typo, Reggie, Dink, welcome back. I've been getting a lot of questions from you guys about fake accounts, bots on Twitter. It has been insane on X lately. So, Litxchange is now a verified organization with a gold badge. You will notice that Litxchange now has a gold badge, so if you don't see the gold badge there, you guys know that it's definitely a fake account. And then myself as well, not only do I have a blue check mark, but then I am also an affiliate of Litxchange, and if you click there, it takes you to the Litxchange app X account. So please keep that in mind. If you're getting DMs from anybody pretending to be me, @BossBlunts1 is my only real account. The blue check mark and the affiliate link to X, which nobody else will have, as well as the gold badge on Litxchange app. So just so you guys know. Hey, Carlos, welcome back. Nat, Reggie, here's my friends. Hey. Yeah, Lego, my friend here, is a mod to the channel. Has been with us, a good friend of mine for years now. Appreciate you. Try not to use that band hammer unless you have to. Let's keep it cool. Uh, there is a catch 22 with UBS going on right now, guys. And no, Game Hub, that was not me sending you an OnlyFans link for $4.99. My OnlyFans is $599 a month. Just kidding. Of course, that's not. So there's a real catch 22 going on here with UBS. Switzerland has increased the capital requirements for UBS by $26 billion. Now, in case you're unaware, that basically means a margin call. That means that the Swiss government is margin calling UBS for $26 billion more in minimum capital requirements than they had before. Now, that's the top of the range that was actually expected for this increased requirements. But as you guys can see, that increased their capital by over 50%. And the GME and AMC swaps from Archegos and Credit Suisse are likely to bury UBS. Switzerland is so concerned about UBS that these requirements, even though they are currently being proposed and implemented in the near future, aren't actually going to take effect until 2034. 2034, folks. So they have 9 years, basically, of a rocky road ahead of them to try to unwind their positions in AMC and GameStop. It probably won't take that long, but that is what the Swiss government is currently saying. So this is obviously big news in the fact that they don't trust UBS to be able to properly manage their risk, but also they are well aware that taxpayers are likely to have to bail them out. And Kristen Shaughnessy brings up a great point, and she quoted the article and said Switzerland proposed some of the toughest capital rules in the world on banking giant UBS in an effort to prevent another Credit Suisse style meltdown, protect taxpayers, and restore the country's reputation as a haven for rich people. But as I just told you guys, these aren't actually going to be fully in effect until 2034. So I think that leads people to understand that Switzerland is still likely to have taxpayers bail out UBS if there is any major collapse, especially since they are their only large bank as of today. And of course, in case you were unaware, Credit Suisse collapsed due to the collapse of Archegos, who went insolvent due to their short positions and swaps on AMC and GameStop. I'll give you that as the short version, right? What's going on, Giles? Good to see you, my friend. Nat brings up a great point, and the reason that, in my opinion, that Switzerland is saying that is to be able to say that we tried to take preventative measures after the collapse. And I think you are right on point there, my friend. 100% correct. Let's take a look and see. An insider was caught by the Consolidated Audit Trail, the CAT system. Well, this man from Oregon, 79-year-old Alan Williams, was sentenced to a year in prison for conspiring with a Nuveen LLC trader in a $47 million ripoff scheme. $47 million, folks. And right now, Wall Street firms like Citadel and Virtue have called for the Consolidated Audit Trail to be shut down. Why do you think that is? Is it possibly because criminals like Andrew Left are getting caught for manipulating stocks like GameStop and AMC? Could it possibly be because insiders are getting caught insider trading right now? Database, the CAT system, tracks 500 billion trades a day. A day. And this is the kind of thing that it is meant to catch, meant to stop. And in case you were unaware also, Hester Pierce, who was initially nominated by Donald Trump in 2016, was actually, sorry, let me roll back here. Esther Pierce was initially nominated before 2016 to be on the board of the SEC, and Barack Obama appointed her as the actual, not chair of the SEC, but a commissioner of the Securities Exchange Commission. And yeah, this guy went to jail. I'm reading your comments. That's right. Someone actually went to jail, Game Hub. He's getting a 1 year prison sentence for his role in a $47 million scheme. That's pretty pathetic, isn't it? The Securities Exchange Commission is wondering, is this actually worth it? McSqueezy the Cow brings up a great point. He says SEC Chair Paul Atkins wants to refine the amount of data hedge funds have to report CAT system, with new rules focused on detailed reporting on things like counterparty risk exposure, major margin calls, and investment performance by strategy. Now, he says that while this sounds like a win for the individual investor, these changes may actually be a bigger win for hedge funds and private equity firms. Don't necessarily agree with everything that he's saying, but the truth is that Atkins said he had concerns about whether the government's use of the data, quote, justifies the massive burden it imposes. And he has asked staff to undertake a comprehensive review of the data collection requirements added under former SEC Chair Gary Gensler. Right? We know why we call him Gensler, right? Do I think they'll repeal the CAT system? I don't think they'll repeal it entirely, but they may change some of the requirements into what actually has to be reported. And so it's not the end of the world, but we definitely need the consolidated audit trail to continue catching criminals out there that are insider trading, that are manipulating markets, and it would definitely make a big difference. Free Kekistan says, I'd do 1 year for $47 million. Yeah, I'm sure you probably would, but a 79-year-old man probably wouldn't. So I hear what you're saying is that that's a hell of a little slap on the wrist for such a big issue, you know, for such a major crime. 47 million. Game Hub, don't forget about Andrew Left. Okay, Andrew Left was sent to prison for manipulating GameStop and AMC and other stocks about 1.5 years ago, and he's currently sitting in federal prison right now. And he has tried to appeal multiple times, and it has not worked out in his favor. Diaz, welcome back, my friend. Good to see you. In case you guys didn't see this before, Goldman Sachs was fined a paltry $1.45 million for 36.5 billion misreported orders to the CAT system. Billion with a B. 36 billion orders misreported to the CAT system. 98 million order memos incorrectly reported. 6.8 million shorts marked as long. We are talking taking a liability and marking it as an asset. This is the definition of cooking the books, folks. They overreported 98,000 trades to dark pools. And they sent out 372,000 inaccurate trade confirmations. Imagine how many trillions of shares were misreported. I'm talking trillions with a T. Trillions of shares in these billions and billions of orders that they misreported. They literally prevented themselves from getting margin called. They prevented themselves from having to increase their capital requirements. And they naked shorted without the legal ability to do so by marking their shorts as long, and the computer reported the trade. It's obviously a big problem. We need to stop this kind of thing. You guys need to look into Litxchange. Check out the new Litxchange website. You can see part of it here. Get a little bit of an idea as to what's going on, but you can avoid dark pools. You can avoid payment for order flow. You can avoid a whole lot of market manipulation by looking into Litxchange. Sign up for the wait list. Doesn't cost you a thing. If you'd like to invest in the company, Founders Program is now open and ends August 8th. Ends August 8th. Means that after that, nobody will be able to get the perks and equity share ownership that you can currently get in Litxchange as of right now. This will not be offered again. Keep that in mind. At the same time, what is this new Twitter button? Cool. Directly to the next post from this little feature. Elon and the crew seem to be fairly busy. Always good to see. Do not forget, folks, that the reason that UBS is in this situation is because millions of people were robbed of their retirement. GameStop, AMC, SLV, Silver ETF, BBIG, BBY, COS. Over 50 different securities were made position close only within a matter of 2 weeks. And tens of millions of retail investors lost out on their ability to buy more stocks and options and sell them for a higher price. Meanwhile, big money was saved by screwing the 99%. Okay. The stock prices of these companies crashed. Hedge funds were allowed to continue buying to cover their short positions. Synthetic shares were created by market makers failing to deliver. Phantom shares were created by crypto brokers lending shares of tokenized securities that they don't own to help the hedge funds and brokers cover their margin. Litxchange solves all this by routing your orders directly to lit markets like the New York Stock Exchange, like the NASDAQ, like IEX, etc., instead of sending them to wholesalers that create synthetic shares that fail to deliver, create phantom shares, artificially dilute stock prices. Are you beginning to understand? Big money here, smart money, they like to call themselves, created even more short positions, pushed down the prices of these toxic derivatives, with toxic derivatives, swaps, bullet swaps, etc. Market makers continue to buy your orders from stockbrokers using payment for order flow, even to this very day. If you're using Robinhood, Webull, IBKR, E-Trade, etc., Fidelity, Schwab, blah, 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 you name it. Probably 99% of brokerages right now are using payment for order flow to these wholesalers, high frequency traders that are front running your trades. And your dollars mean nothing because the market makers internalize your trades, front run them, and then lump your order together with millions of dollars, millions of others to be processed as one hidden order in dark pools. And they even misreport your trades, misreport their shorts marked as long. And again, Litxchange solves this. Are you beginning to understand the purposes of the creation of this company? Your stocks don't go up in price because the dark pools obscure the price. They make billions and billions of dollars by doing this, folks. But nothing lasts forever. A mother of all short squeezes is inevitable. Inevitable. And retail will eventually be blamed for all of this money that's lost. Going to be lost. This is what Ken Griffin did to Spirit Airlines. This is how he became owner of Spirit Airlines. If you're unaware, he is. This is what happened to Toys R Us, Radio Shack, Burger King, Payless, Gymboree, Sears, Neiman Marcus, PetSmart, Nabisco, and so on and so on. And they tried to do this with GameStop. They tried to do this with AMC, but they failed. They failed because millions and millions of retail investors, just like you, just like me, own these companies and diamond hand AMC and GameStop and have not let go of their share. Sure, some people have sold, but many more have purchased than those that have sold. They failed because GameStop shares are highly DRS'd, heavily owned by retail. Failed because retail owns 90% of all AMC shares that should be in existence per AMC share counts. They failed because retail investors are educated and are fighting back. And this is the time for you to learn more about dark pools, pay for order flow, front running, and synthetic shares. The number one way to stop them from manipulation of markets to order on lit markets. Hence, Litxchange Act. That's the point. Real shares from real people, not failures to deliver, not synthetic shares. South Korea, folks, has caught a ton of naked short sellers. Look at this. Chris O'Shaughnessy brought this up. Nomura Securities, JP Morgan, UBS, Morgan Stanley were all caught naked short selling in South Korea. They've launched an investigation into illegal short selling major global companies from 2023 and forward, and they plan to finalize related sanctions before short selling resumed in March. So those companies got, of course, their little slap on the wrist. We're talking in February, prosecutors raided HSBC and BNP Paribas. In March, HSBC and 3 traders were charged with naked short selling. In January, financial regulators announced details of their investigation into the naked short selling, and they're still going after more to this very day. But this is unlikely to end anytime soon. Awesome article written by Dennis Neal. You can find him on Twitter. Linked it in the Twitter profile. Linked his Twitter profile there as well. Trump can help investors by banning naked shorts. And you're absolutely fucking right, Dennis. I got to tell you that. He can do that. Does the United States have the balls to ban naked shorts, though? A lot of people are saying, no, that's, Donald Trump, and he's a rich guy, and those are a lot of his friends. Correct. I'm sure he's got a lot of rich friends. Fact remains, though, that up until now, he has fulfilled many of his campaign promises, including getting rid of Gary Gensler, which we all know didn't do a damn thing to help retail investors. And this could be done here with the swipe of a pen. The question is, we know that DJT stock, Trump Media Group, has been heavily attacked by naked shorts. We know that Ken Griffin of Citadel Securities has publicly spoken negatively about Donald Trump, and that Donald Trump has called out Ken Griffin for, quote, hiding his money on several occasions, even in talks at the White House, even in speeches at the White House. They are not getting along at all. And Donald Trump is very aware of everything that's going on with naked shorting in the markets, as is Elon Musk. And of course, they've had a bit of a fallout, but I don't really buy that much. Yes, Patrick, Trump and Ken Griffin absolutely hate each other. I will tell you that. Dennis Neal here says, I'm going to read this article to you. It's very short. It's a great one. President Trump has issued more than 150 EOs, executive orders, during the first 130 days of his second term, covering everything from news, tariffs, and AI to protecting American communities from criminal aliens. Now, one of the most important of these orders may be at hand: a bold measure to curb naked short selling, naked shorts, by which market makers sell short vastly more shares in a company than are available for sale. Highly questionable practice, which oddly has flourished. It's a manipulative scheme, conspiracy between brokers and market makers to manufacture securities out of thin air and institutionalize naked shorting at scale, says John Wellborn, a senior lecturer and PhD professor, I might add, at Dartmouth College. And I've got information from him coming out right now. He's got an 81-page paper posing 3 major fixes anchor the new order. And I've got it right here. This is John Wellborn from Dartmouth University, PhD in economics, right up there with the PhD in economics, Dr. Marco Metzler, former Fitch Ratings Agency director. We've had on the channel multiple times, and I will have Dr. Metzler in another interview next week as well. But you can see that his massively long thesis brings up a great point, and it was drafted by We the Investors, founded by Wellborn's ally Dave Lauer, former Wall Street trader, and now sources in the Trump administration aim to get it to the Resolute desk. Now, if this were to happen, let's just say that Ken Griffin would hate Donald Trump all that much more. A lot of these companies and people would, but I don't think that really matters, right? I don't think that really matters to Trump. I think he cares more about his legacy and doing the right thing for the American people, as we've seen him prove that time and time again. Naked shorts played a role in the collapse of Bear Stearns and Lehman Brothers in the market meltdown of 2008. 2017, in a $1.2 billion buyout of Dole Food, almost 5,000 investors claimed to own 49.1 million shares. That's 12.5 million more shares than Dole's total shares outstanding. How does that happen, folks? The creation of naked, non-existent shares. That can all be prevented if you route your orders to lit markets with a company like Litxchange. In recent years, naked short selling has roiled the stocks of GameStop and AMC and dozens of smaller shops. I would argue hundreds and hundreds of other shops. Petros Pharmaceuticals has fewer than 5 million shares, but in one day in late March this year, they somehow traded 1.1 billion shares by 2 p.m. So they have 5 million shares. And they didn't trade 100 million, but they traded 1.1 billion shares. This is very similar to what we've seen with quantum biopharmaceuticals. And I am going to have the CEO, Zishan, and the CFO, Jason, of QNTM, is their stock ticker, QNTM, Quantum Biopharmaceuticals, here in an interview on this channel next week as well. That has already been recorded. I am just finishing editing that up now. And let's just say they also had many, many more shares traded in one day than actually exist. And I could go on, right? But you get the idea. How can a hedge fund sell more shares than a company has issued? Because market makers executing trades for hedge funds create fake electronic shares and sell them into the market. And this is legal, folks. That's the problem. This is legal. Okay? The soaring supply artificially depresses a stock's price, producing further gains for short sellers. In a short sale, an investor's betting a stock will plunge by selling shares borrowed from someone else's account. Brokerage firms are allowed to borrow shares from client accounts under terms buried in lengthy customer agreements. The seller collects the cash from the sale and then buys back the shares later on after the price falls, returning them to the account that had loaned them out and pocketing the profit. But if they can't buy back the shares, that becomes a failure to deliver. Therefore, we now have phantom shares that shouldn't actually exist now in existence. That creates the artificial dilution of a stock's price. Think of any other asset on earth where you can sell what you don't have and don't own with a promise to find it later. There is none. If this were non-existent plots of land, the sellers would go to prison. But because these are stocks, sellers get a slap on the wrist and continue to take profits hand over fist over and over again. Because when you buy or sell shares on Robinhood, on Schwab, on Fidelity, and so on, the market makers buy your orders from those brokers using payment for order flow. They internalize them in their dark pools and create synthetic shares, front run your trades, and make a shitload of money off you. That is where Litxchange comes in, prevents that from happening. Because if the wholesalers can't get their hands on them, because the orders were routed to a lit market, it means you're getting real shares from the NASDAQ, from the NYSE, from IES, from other people that are actually selling them. What does that do to the stock price? Well, it makes it accurate. It makes the stock price go up when there's fewer shares, and it makes the stock price go down when there's more shares, because they are real, actual shares. So, the target of the proposed order is SEC's regulation show. We call it Reg Show here on this channel, right? It was imposed 20 years ago after the dot-com crash, and it grants an exemption to the market makers. This lets them ignore the rules, restrictions, and sell the phantom shares without having to first line up real shares to back the trades. The exemptions were requested in 2005 by Bernie Madoff, who later was exposed as one of the biggest stock scammers of all time. Folks, there's a reason that this is called the Madoff exemption, because Bernie Madoff pulled this off in the greatest Ponzi scheme in history, even bigger than the one he was arrested for. It's called payment for order flow. And the Bernie Madoff exemption. It is Rule 203B III in Regulation Show that allows market makers to create synthetic shares out of thin air and sell them to you even if none exist. And then if they can't return them, well, then they simply fail to deliver. They're automatically forced to buy them back later on in the future by the broker-dealers. And that still causes artificial dilution of the stock price. So, the exemptions let, quote, a small group of participants manipulate markets for profit and short unlimited quantities of shares without verifying timely settlement. It would lift the exemptions and force market makers to follow the same rule as everyone else. Proposal here would lift that exemption, 203B III, the Bernie Madoff exemption, and would require traders to line up a pre-borrow agreement, ensuring that real replacement shares are available before a short sale can be made, and impose fines for these fails to deliver when a trader fails to repay the borrowed shares by a given deadline. So they created this list called the Threshold Securities List of companies with a high degree of failures to deliver in their stocks. Guys, we have seen AMC and GameStop on this list for hundreds of days consecutively in the past on multitudes of occasions. And Dartmouth's Wellborn, the PhD economist, says the threshold list is a litany of failure. It's just a list of liquor stores getting robbed, but it doesn't tell you who's robbing the liquor stores or why. And as I mentioned earlier, Trump Media and Tech Group, DJT, has been the target of short sellers, and it spent more than 60 days on the threshold securities list last year. The CEO, Devin Nunes, asked Congress to investigate and called out market makers that handled over 60% of those trades. Of course, Ken Griffin came out and said some very negative things about Devin Nunes, and Devin Nunes has then proceeded to call out Ken Griffin for a lot of his criminality on multiple occasions, and even taking it all the way up to Congress, as he is a former congressman. Now, President Trump has the chance to help millions of investors, but will it actually happen? I hope so. Am I putting all my eggs in this basket? Absolutely. I am not going to leave it to any regulator actually do the right thing, because the last time they tried to do that, well, they really shit the bed. Take a look at this 81-page paper. I'm not going to read the whole thing, obviously. Actually, most of it. I'm not going to read it out to you, in which this Dartmouth professor in economics says that Reg Show's legacy is mixed. Contained a series of regulatory loopholes that were abused by dishonest market participants to naked short sell and fail to deliver. Moreover, final rule draft eliminated an initial proposal for monetary penalty for failing to deliver. Reg Show, so there's no financial penalty. Reg Show did not require any disclosure about which firms were failing to deliver and to what extent. As a result, thousands of companies experienced large and persistent failed FTDs worth billions of dollars during 2005 through 2008. Now, they did amend Reg Show in 2007, 8, and 9 to address some of these loopholes and reduce naked short selling. But nevertheless, these Reg Show reforms and enforcement actions reduced but did not eliminate naked short selling and FTDs because it is much too profitable. Dozens of public companies are currently on the Reg Show threshold securities list, the list of firms with large and persistent FTD positions. The average daily dollar value of FTDs is just under $3 billion, and that's relatively unchanged from 2005. A related mystery is why so many threshold list tickers are ETFs. Well, folks, I can answer that one right there. Why are so many of these positions ETFs? Because if you short an exchange-traded fund, the underlying assets do not reflect the short interest. So if I have AMC here and GameStop here and silver here, SLV ETF, let's say, and I am shorting AMC directly, Well, that makes the short interest go up higher, so people can see that I'm shorting it. If I'm shorting GameStop stock, GME, people can see that it's going higher. That is what happened with Melvin Capital in 2021. They directly shorted GameStop, and that made the short interest appear to be 140%, which was accurate. In reality, in my opinion, it wasn't accurate because that wasn't 140%. It was probably somewhere in the range of 1,000%. But after their insolvency and they were bailed out by Citadel and Virtue, who gave them billions of dollars to basically take over their positions and get lost so that there wouldn't be further margin calls against their firms as market maker, firm either, or their hedge fund, it creates a position in which those firms can then take some GameStop stock and put it in an ETF, and take some AMC stock and put it in that same ETF, and do that into 20 different exchange traded funds. So now they can short exchange traded fund number 1, 2, 3, 4, all the way through ETF number 20. And as they short those 20 ETFs, the underlying asset GameStop and the underlying asset AMC do not reflect the increase in short interest because they're not being directly shorted, even though there could be millions and millions of shares of each of those in every single one of these ETFs. Only the ETF shows the short interest, but it's not reflected on the data that's reported, self-reported, by the way, by those firms, by those market makers, by those hedge funds to the New York Stock Exchange, to the NASDAQ. It's really, really simple, folks. It sounds more complicated than it really is. They're just manipulating markets. And that is why reg shows inadequacies are further revealed by the fact that certain companies remain on the threshold list for hundreds of trading days, including the S&P 500 retail ETF, XRT, and GameStop, GME. Related and unresolved regulatory challenge emerges when the same stock is relent multiple times through short sales called rehypothecation. You guys have heard that on this channel times. To wit, the XRT short interest is often over 100% of shares outstanding. And even when it is, even though GameStop is in XRT, for example, XRT short interest could be at 100%, but the GameStop short interest is not increased to reflect that amount changing. All manipulation of markets. So hopefully Donald Trump does something about it, but I'm not putting all my eggs in one basket. That is why we can reduce and eliminate this and protect your investments. The goal of Litxchange is to safeguard your investments and save you money. Dark pools and payment for order flow are used to manipulate stock prices, front-run your trades, and create synthetic shares to artificially dilute companies, ensuring that market makers make billions and billions of dollars while you lose money. And this is crazy, but it's 100% legal. Litxchange, of course, protects you from these detrimental forms of manipulation that hide within the legal and shady world of dark pools and payment for order flow by automatically routing your trades directly to lit venues and avoiding payment for order flow. Got a little bit of a crying issue over here with my children. They're just fine. They're just having a little spat over the tablet, of course. Not like they don't all each have their own, but everybody wants the same one, right? It's like they're market makers fighting over GameStop and AMC shares over there, and there's only one left. Shout out to Frank Nez on franknez.com. Said that a firm is now penalized after losing oversight of $779 million in the OTC market. And of course, they lost track of basically almost $1 billion in the OTC market, and they got a measly $2.8 million fine for their failures in penny stock trades, the OTC. Not only that, they operated, or Canaccord, I should say, was slapped with a $2.8 million fine by Canada Investment Regulatory Organization, for failing to supervise $779 million in penny stock trades that were conducted by an unregistered broker-dealer between 2018 and 2021. Penalty includes $250,000 in investigation costs, highlights significant lapses in oversight that allowed manipulative trading practices to go unchecked, raising serious concerns for retail investors who are often drawn to the volatile world of penny stocks. Guess what, guys? No retail investor is going to get a penny from this $2.85 million fine. This money goes to the Canadian Investment Regulatory Organization. They have no vested interest in getting this behavior to stop, because when they find these companies, the money just goes to the regulatory overseer. They're basically saying, you made a mistake, you pay us a fine, I put it in my pocket, the person that was damaged gets nothing. Thank you very much. Be on your way, go do it again so we can find you another slap on the wrist. You made tens of millions, maybe more. We're going to take our small percentage and you can continue to do what you're doing. Organic Order permitted approximately 6,000 plus transactions totaling almost $800 million through an omnibus account linked to an unregistered entity described as a toxic lender. The entity operating outside Canada engaged in trading activities that raised red flags, potential market manipulation, layering, and spoofing. Layering and spoofing is creating orders and canceling them before they're processed for the purposes of bringing up or down a stock price. Oh, there he says it right. Often to the detriment of unsuspecting. And again, they flagged them in those activities in 2019, but continue to let it happen through 2020. Right? This is the issues that we're seeing here. Manipulative trading can lead to artificial price spikes followed by sharp declines, wiping out investments for those who bought at peak prices. Erosion of trust. Established firms fail to uphold rigorous oversight. It undermines confidence in the system. Right? Retail investors feel betrayed. Unlike institutional investors with access to legal resources, retail investors often lack the means to pursue compensation for these losses. And retail investors rely on brokers and market data for decision making. And it's very easy. There are many ways to avoid these kinds of things. Litxchange. That's your number one. Litxchange is a upcoming stock and crypto brokerage startup. And you guys have to look into it if you haven't already started. FINRA fined Susquehanna Financial Group for reporting deficiencies. Another market maker being fined a measly $100,000. This article just came out yesterday, June 10th, 2025, on FX News Group under FINRA Regulatory News. And then, of course, was a settlement. And they paid that $100,000 to FINRA. The people that were damaged get nothing. They're saying that from 2021 to 2023, the market maker, Susquehanna, inaccurately reported approximately 74,000 transactions in securities without the required remuneration indicator. Basically, you can mark a short as long, make a ton of money off of it, short stock when you're not supposed to be legally able to, simply because you mismarked it on the computer with one letter instead of the other, make a ton of money, and get fined a measly $100,000. Again, problem with markets. This is legal. Okay, we can fix all of that. Not every single problem, but all of the problems that we're talking about. Routing. George Pelikaris, CEO, former CEO and founder of MMAT, Metamaterials, said, "Thank you, Dennis Neal, for your timely article on Newsmax that we just went over, backed by the March 2025 research working paper Reg Show at 20 by the PhD economist and John Wellborn. You guys have any interest in having in possibly seeing John Wellborn here on the channel for an interview, maybe even a live interview? Drop it down in the chat and let me know in the comments or in the chat right now if that's something you guys want to see. And I will reach out to Mr. Wellborn, should I say Dr. Wellborn, excuse me, who again is a PhD and economist here. And see if he would like to come on the channel and discuss this further. Because this is a hell of a document here. And I'm not kidding when I say it's 81 pages of absolute fire. This thesis is chef's kiss on point with what he's talking about. He delves into continuous net settlement and failures to deliver and naked shorts and Reg Show and all these other issues that we're currently seeing and the exceptions to Reg Show. Right? He even goes into the details with XRT and GameStop and the failures to deliver and the charts included there. So I really enjoyed reading this, but I'm just trying to summarize it for you because I'll probably put you to sleep because some of the verbiage and used here is extremely technical. And unless you know exactly what all these things mean, it's going to sound like I'm speaking Chinese to you. And I understand that that's probably not the most fun thing in the world for everybody, right? All right. Reggie, looks like you'd be interested. Sue Ray, welcome, my friend. Queen, you know we're gonna do work. We always do, my friend. Take care of business. And yeah, I would really like to have, I would really enjoy having um, Mr. Dennis Neal here on the channel. We've had Frank Naz on the channel. We've had Dr. Marco Metzler. It'd be nice to have Mr. Dennis Neal. It'd be nice to have Dr. John Wellborn on the channel as well. I think that'd be really cool and really informative for a lot of retail investors. And I did reach out to George Palikaris, and he did say that in the future he would be willing to join us on the channel. So I'm very much looking forward to that. But anyways, he goes on to say that Dr. Wellborn is a well-published academic with a proven track record in financial markets research, particularly on short selling and reg show. There's a 2-decade failure to enforce fair market rules, failures that mirror and explain the unresolved issues behind a number of stocks, including Tesla, DJT, MMAT, MMTLP, GameStop, AMC, blah, blah, blah. You get the idea, right? There's so many, including precious metals, silver and gold. 97% of all silver and gold derivatives are traded by banks in dark pools. 97% of all silver and gold derivatives are traded by banks in fucking dark pools. That is how they manipulate the price. That is how. The difference is that only 1% of retail investors actually own any physical silver and gold, versus 90% of all shares of AMC are owned by retail, and a large percentage of GameStop as well. I don't have an exact number for G. Get my point. How reg shows farce fuels train wrecks. ETFs like XRT saw failures to deliver peak at $418 million, and short interest as high as 699% of the float, yet the SEC has taken no action for years. Regshow was sold as the sheriff to tame Wall Street's naked shorting laws. Instead, it has become their enabler. XRT isn't just king of the threshold list, the sovereign of financial absurdity, or as we say back in the UK, the dog's bollocks, right? GameStop is the unruly guest who, after being asked to leave, climbs back in through the window. FTDs through the roof, short interest off the charts, etc. Tesla, tech darling perpetually under siege, loved by retail, hated by shorts, stalked by FTDs like a persistent ex-girlfriend. Every time Elon tweets, the shorts pile in and the fails pile up. George continues to say, Trump Media Group, DJT, didn't just debut, it crash landed in the markets like a marching band in a minefield. Volatility off the charts, FTDs piling up, naked shorts louder by the hour. Metamaterials and MMTLP. The U3 halt was not a glitch. It was structured negligence, in my humble opinion. Retail watched as phantom shares flooded the system. Failures to deliver and short interest outpaced the laws of physics. Dartmouth's Reg Show at 20 confirms in page 29 the highest FTD level was $20.3 billion on September 23rd, 2008. Ladies and gentlemen, just 9 days after the worst single day of stock losses in the history of the S&P 500, which the S&P on September 14th lost 13.9% in one day. And of course, 9 days later, what happens? $20.3 billion in FTDs. And what happened exactly like 28 days after that worst day in S&P 500 history? Oh yeah, Volkswagen squeezed when Porsche owned 55% of all Volkswagen shares. 30 days after that, after the worst day in the S&P 500 history in 2008, Volkswagen squeezed to $1,000 a share. Why do you think that? Well, yeah, because Volkswagen was owned 55% by Tesla, 55% by Porsche. What do you think is going to happen when retail investors own 90% of AMC and probably almost as much in GameStop, have a bunch of it DRS the next time that there's a market crash situation? Something very similar is like median FTDs were $2.26 billion for that. Here's what FINRA didn't plan for. The FOIA docs exposed coordination between FINRA, the OTC, the DTCC, and the SEC. Timelines, names, silence. No one blinked when MMTLP got halted. They knew they went silent for months until they could put together a story, which was revised at least once almost a year after the halt. But here's what they didn't plan for. They didn't plan for 65,000 relentless MMTLP shareholders, a court-appointed trustee following the paper trail, two management teams flagging misconduct, legal and financial teams, and collecting all available trading data to understand the size of the problem, and a small group of quiet allies in Congress watching and building the record, preparing the next move. They thought we'd folded. They'd miscalculated. Wellborn's paper confirms that what we have all come to know. Market makers exploit reg shows, bona fide exceptions, naked short with impunity. MMTLP's over a month on the threshold list was not a glitch. It was a feature. And the SEC's inaction was a neon sign reading, "Come manipulate here." The market maker exception is not a loophole. It is a black hole. Firms like Citadel and Virtue turn market making into a shell game, resetting FTDs via options shenanigans while regulators sleep. XRT's 1,691 days on the threshold list. That's a badge of honor, Guinness World Record, and a system that rewards financial arson. It demonstrates systemic settlement failures. Threshold securities require special monitoring under Reg Show. We haven't seen any meaningful enforcement to date. Did you know, says George, regulation shows bona fide market making exception does allow market makers to short without borrowing shares. Critics argue this creates a loophole for perpetual FTDs, cycles via option strategies like deep in the money puts. And I will add that those deep in the money puts are married with your deep out of the money calls in order to try to offset them and for them to try to settle using net settlements. And then they fail to deliver over and over again. That's why you guys see multiple cycles of stocks like AMC and GameStop going up, going down, squeezing up, and then getting pressed down harder, and then squeezing up again and getting pressed down harder. And just so you know, at one point, that's not going to work anymore. That's not something that's going to be able to continue forever. Nothing lasts forever. Nothing. And at one point, just like Credit Suisse, just like Archegos and Melvin Capital, and the dozens and dozens of other hedge funds and family offices that have collapsed due to their illegal manipulation of AMC and GameStop, a lot of the existing firms right now will also collapse. Huge shout out to John Wellborn there. Well, senior lecturer at Dartmouth, founder of Wellborn Economics. Exceptional post. Long on AMC says, I can't wait to be a part of revolutionary markets in Litxchange. Here's my friends, and we can't wait either. We're very much looking forward to it. There's a press release coming out next week. In case you guys didn't know, Litxchange app plans to IPO in about 3 years. That could be sooner, could be later. Founding investors, those people that currently own Litxchange and people that invest in the private equity of Litxchange and get that equity ownership, get those shares now, will have the opportunity to sell shares prior to IPO if Litxchange does share buybacks. There's a very good possibility that we decide to offer you money more than you paid to buy back your shares so that when we IPO, Litxchange can then profit on those shares. You don't have to accept it, but it's a possibility. There are more than one way to have a liquidation exit opportunity or a liquidity event in private equity. That is one of the ways. Second way would be upon IPO on the stock market, you could then sell your shares the moment it IPOs. You can hang on to them. You can sell it a day later, a week later, a month later, 10 years later, or prior to IPO if other people and institutions want to buy their shares. So as Litxchange continues going forward and continues to grow, there may be other firms, institutions, or retail investors that might want to buy your equity before the IPO happens so that they can maximize their profits upon IPO. Now, of course, this comes with risks. There are no guarantees. Markets, and I have to legally say that. Right? Everything carries risk, including private equity. But the crowdfunding campaign does end August 8th. If your account is not funded and you have made a pledge, you will not be a founding member. If you have made a pledge so far, if you have subscribed, you do not fund your account, you will not be a founding member. On our website, you can find our SEC filings, the business plan, the pitch deck, the link to the funding portal, the FINRA regulated funding portal, Silicon Prairie, and see what other people are saying and why they chose to invest. One of our featured investors, at the time he had invested $20,000, but currently I believe that's probably closer or maybe even exceeding $40,000 at this point. Nicholas Butorak says, I chose to invest in Litxchange because I firmly believe in their mission as well as their position to disrupt the financial markets industry, $3.6 trillion per year. Stock and crypto broker that is for and by the retail investor is a welcomed addition to a marketplace of investment tools that are consolidating by the year into larger and larger brokerages that have become too disconnected from the needs of their customer base. This is our chance. This is our chance to be a part of history. Investing in a company that prioritizes transparency and proper price discovery of equities. From my viewpoint, at Litxchange, we are the customer, not the product. And you are absolutely right, Nicholas. And if you become a founding member, you are not the customer. You are the owner. You are a shareholder. You are my partner. So thank you to Nicholas for being our lead investor. Thank you to everybody else. I see you in the comments in the chat right there. For the hundreds of people that have already invested in Litxchange, looks like we have now hit $775,000 raised to date. We are nearing our goal here, and once we near our goal, or August 8th, whichever comes first, then it will be closed, and you will never be able to have these opportunities again. And there are a lot of different opportunities there. The minimum investment opportunity is $500, which gets you 1 unit. 1 unit is the equivalent of many, many shares, just so you know. That's just current. That's private equity words. You get early access into market insights and reports, exclusive investor NFTs, a copper coin, custom Litxchange hoodie, one of a kind, 6 months of free level 2 data, 25% discount on trades for up to 6 months, 150 trades, early access to new investment opportunities, new projects and services, first buyer's rights of additional stock prior to IPO if you want to buy more, which nobody else will get except for founding members, and equity share ownership in the company. And they are cumulative. So when you invest 500 plus 1,000 plus 1,000, then you get the $2,000 level, for example, and that comes with other things like a custom silver coin, a premium limited edition that will never be released again. 12 months of alpha subscription, 18 months of free level 2 data, 50% discount on trades for 18 months, 250 trades a year. First buyer's rights of additional stock, and then more and more and more and so on. And you get more and more perks and benefits as that moves up as well. We have the Gamma Squeezer. We even have the Deep Fucking Value Investor at 25K. If anybody's interested in investing that much, I know there's several DFV investors already in Litxchange, and we're talking you get multiple silver coins, premium limited editions, one of a kind, silver bar, a 10-ounce silver bar, lifetime access to keynote speeches, investment newsletters, lifetime alpha subscription to Litxchange think tanks, lifetime invitations to investor conferences and networking events, lifetime free level 2 data subscription, lifetime 10% discount on asset management fees. So when you're filthy fucking rich, we'll manage your assets for you and give you a 10% discount on any fees associated with that. 65% discount on trades for 100 months, 100 months, up to 250 trades a year. Early access to new investments, new projects, new services, become a founding member in those, and NFT framed wall art, personalized and signed by myself and my co-founder, and then many, many other things that are available, silver kilo bars, etc. And these are all one of a kind that will never be created again. So as you can imagine, these will probably be quite the commodity in the future as Litxchange grows and IPOs and becomes larger and larger. that they might be worth significantly more than their actual value in silver and gold, simply based on the fact that there's only a handful of them in the world. So, with that being said, go ahead and take a look at that, folks. There's my friend Nicholas. Hey, cheers, partner. Thank you very much for your trust and your support. I'm very much looking forward to working with you and the other founding members and partners here in beta coming in the fourth quarter of 2025. Thank you, Giles. Thank you, Queenie. Bruce, hello, my friend, says, have a share. Is the exchange only for buying and selling? I'm not sure if I entirely understand your question, Bruce, but Litxchange is going to be a full service online stock and crypto brokerage with a lot of different benefits to you, put it that way. A lot of different services. Trade stock, you'll be able to trade stocks, options, cryptocurrency. And then as time goes on, we're going to implement other options, margin, futures, and so on and so forth. So we will be rolling out with new products, with new abilities. We will have financial advisors. We'll be there to help you, as well as actually handle your funds for you. If you don't know how to invest or you don't want to invest your own funds, you have a ton of money, you have a pension, a 401k, thing of that sort, a thrift savings plan, IRA, ISA, you'd like us to handle it for you, then we will handle your asset management. Not me personally, of course. I'm the CEO. I'm busy running the company, partnerships, and so on. But our actual financial advisors would be doing that for you. Anyways, ladies and gentlemen, I think I will leave you with that. It has been a blast. Thank you again, everybody. Thank you again, everybody. I see your chats, man. You guys make me laugh so much. Long on AMC says, I see so many different opportunities with Litxchange. It's ridiculous. And I think you are absolutely right, my friend. There are some crazy opportunities and things that we have planned that right now you guys don't have any idea about yet. And as time goes on, I think people are going to be extremely excited and happy that they invested at this early. This is not going to happen again. Here's my friends. Reggie, great point. Please hit the like on the way out. Share it, repost it. Send this to somebody who's interested in stocks. You don't want to invest yourself. That's cool. Send it to somebody that might be interested. What's that? Number one must be mine now, right, Tyler? Tyler's trying to get number one fan. I love that, man. That's awesome. Thank you, brother. You're too kind, Tyler, and everybody else. Saludos de Tijuana. Saludos, Jimenations. Good to see you, everybody. Take care. I wish you peace and wealth. We're going to be so